investmentstrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Tuesday, March 4th. We don't have all that much on the economic calendar coming up today. Just at 9:30 GMT, we have PMI data coming out from the United Kingdom. So we'll talk a little bit about the Ukraine. Normally during periods of tension like this, the markets will be risk adverse, which means investors are going to be looking to invest in what are called safe haven assets, such as the United States dollar, United States treasuries, the Japanese yen, and gold. So in the short term, we're going to be some upward pressure in those assets. It also means investors are more wary of investing in emerging markets, particularly those with poor fundamentals, such as Turkey and South Africa. And also we have the situation in China, where tomorrow we have the beginning of the People's National Congress, which is expected to introduce new economic reforms. So investors might be a little bit wary about what the People's National Congress will decide to do. In the situation, particularly in Ukraine, it's already having some effect, particularly on Russia. The Moscow Stock Exchange dropped by 11% just yesterday, and according to a study by Bloomberg, this means a immediate reduction in about $13 billion worth of value from in Russian equities was erased just yesterday, and that's expected to continue over the near term. So we have there's some impact right there. Also, what makes the Ukraine particularly more relevant, particularly to the euro and European markets, is that about 15% of the eurozone's energy needs are met through oil and gas exports from Russia, which go through the Ukraine. And so if there is some unintended escalation there in the Ukraine, this could cause some disruption in supply, which is why Brent oil has gone up about 3% yesterday. Since Friday, the value of Brent oil has gone up by 3%. Markets for the short term, the consensus is kind of reflected by the chief investment analyst for Alliance Global Investments, which oversees about $220 billion in investment value. He said earlier today that the general view is that the situation in the Crimea is going to sort of simmer for the short term, which will cause some volatility in the market, some pressure on the downside, which would be a good opportunity to buy until the markets recover their previous trend based on fundamentals and technicals. But of course, there's always the increased risk of an unintended escalation, which is going to generate increased volatility within the markets in the short term. And as always, when you have increased volatility, you have increased risk, but at the same time, you have increased opportunities. So going over to the markets, the S&P 500 yesterday dropped by 0.8% and closed below 1,850, which is pretty much expected. During the Asian session, Asian stocks were mixed. We had Shanghai Stock Exchange went down, whereas Hong Kong Exchange went up. Initially, the MSCI Asian Stock Index dropped about 0.4%, but then recovered most of that to close virtually unchanged by the end of the session. And going into the session now, S&P 500 futures are trading up by just marginally 0.1%. The euro yesterday moved lower, and it came down to support here at 137.25. If that support level holds, it could rebound towards the year high of 138, but we could expect it to also continue further down, which means we'll be looking at our next level of support at 136.80 is our next support level. If that doesn't hold, we have 136.30. The pound also yesterday was dragged down mostly through as well, but during trading so far today, it has rebounded above 136.60, which is support level. If that doesn't hold as support, we could move down towards 166.10, and then we have 168 as our next resistance level, especially if we have pretty good PMI data coming out at 9:30 GMT. And The dollar yen pair bounced off 101.30 as expected yesterday and is continuing within its range of 101.30 support and resistance at 102.75. We also have a little bit of resistance here at 102.30 for the short term. And then gold also, as expected, continued to rise. It's at 1,350. It closed at 1,350 yesterday. And as mentioned earlier, we still have increased upward pressure on gold. We have the previous high for November of last year, which is it's in sight at the moment, hasn't closed above that. If it breaks above that level, which is 1,357, it could open up the next level at 1,400, or we have support here, somewhat unlikely, at 1,325. And that's it for today. Don't forget to subscribe to get the latest updates, and happy trading.